Ladies and gentlemen, we now move over to the last session before lunch on the subject CBDC Odyssey, Pioneering Public Infrastructure. I am pleased to welcome the panelists to the dais. Shri Joydeep Datta Roy, ED Bank of Baroda, Shri Balaji Rajagopalan, CTO, State Bank of India, Shri Ajay Rajan, Country Head, Digital Transformation and Transaction Banking, Yes Bank, Shri E. Ratan Kumar, GM IT, Central Bank of India. And moderator for this session, Shri Yashraj Irande, Managing Director and Partner BCG. May I request all panelists and moderator to come to the dais, please? Thank you, sir. May I request Shri Yashraj Irande to initiate the panel discussion?
Thank you very much.
Thank you, sir.
Check. Yeah, this works. Okay, good afternoon, gentlemen. Good afternoon, ladies and gentlemen in the audience. I often find myself in this precarious situation of engaging on a topic of discussion which is as exciting as it is not necessarily well understood, as it is curious, as it is uncertain. CBDC probably defines the gold standard on what the cutting edge is in financial services today, amongst many other things. And to have the discussion on this really interesting and important topic, I am joined on the panel by four very distinguished gentlemen who have been not just participating but also shaping the thinking around CBDC, central bank digital currency in India. So we have people who have very, very deep technical understanding of what it means. We have people who have very deep understanding from a consumer perspective. We have people who have a very deep understanding from just regulatory hurdles, challenges to be overcome. So with that, I'm going to get the discussion started. But there's one thing I want to call out to the audience so that all of you are aware. Audience response. That was. Okay. Okay, this works. Fine. So I'm sure now everyone is awake. But there will be some audience poll questions. If we like the answers, Joydeep sir might give you a reward during the question. But in jest. But let's get started. So to kick us off, and this is a question that I will go across the panel and get all of your reactions to, because this is really something that requires many perspectives. Okay. So, sir, Ajay, if I could start with you and then come this way. What is CBDC? Can you demystify it for us?
I know I have a loud voice, but still a mic would be helpful. Am I audible at the last? Yeah. Okay. So CBDC as central bank digital currency, or digital rupee, e-rupee as we call it in India, is nothing but digital version of cash. So while we know that cash, while digital has been growing globally, more so in India, but the relevance of cash is not lost, right? And even post demonetization, we've seen that cash has continued to grow and is a very integral part of the economy for the country. So what Reserve Bank of India and regulators across the globe, are trying to do is also, given that digital penetration is now increasing, they want to give a digital version of the physical cash as a additional not only payment instrument but as also as a stored value instrument in the hands of the consumers. So that is what is CBDC. It is a digital version of cash. It is. It also denotes the highest level of trust which a payment instrument can have. It, unlike any other payment instrument, which is bank risk, here you are actually talking about a central bank risk, right? So it gives you digital quotient. It gives you the trust quotient. It is more anonymous than any other digital payment mode because it is wallet based. The transactions reside within the wallet, unlike other digital payments where the transactions are very visible in your account statement, as I'm sure all of you are experiencing with more and more usage of UPI. So these are the features which define CBDC. Do you want me to?
Ajay, yeah, so we'll come to that. But you already said something that I think is really important, and I just want to underline it for the audience. The first thing that you said, which is that it is digital cash, right? It means the notion that it is cash and it is therefore offline, therefore all of those notions come through it. So I think that's one important takeaway. It's stored value, and then the trust with the counterparty really being the central bank instead of a bank. So I think pretty important distinctions. I want to bring a slightly different nuance to it with Balaji and move a little bit under the hood of what is happening here. And then Joydeep sir, I'll come to you and try and bring it all back together in terms of how our bank is thinking about it. But Balaji, you have been deep on the technology, the underlyings of what is this CBDC. So I think at the surface level, it is digital cash, it is a store of value, it is a trust instrument against a central bank. But what is it under its hood? From a layman's perspective, how do I understand what is CBDC under its hood?
Yeah, thank you. Thanks for the wonderful opportunity. I mean, I think as a nation, we should feel proud for this initiative as such. Very, very crucial one, especially when you talk about CBDC. It's a digital form of currency. Somebody gets confused with UPI, like in that. Am I audible? Yeah. So it's a form of a digital currency from a largest country, as one of the largest countries, in terms of volume, in terms of scale. It helps for reducing the cash printing. One of the important message, which in the recent, it was told that FY22, the cost of printing was close to 5,000 crores. So the fundamental objective is to make sure that there's a transparency, trusted system which is being built in. The core of the core system is there's a hyperledger, a blockchain framework which is being built in to give in that fundamental distributed, trusted network, which is essential for the single truth of source, which is essential for transparency of the flow of the money. And subsequently, from the distribution perspective, we have around 13 banks currently in pilot. SBI is one of the lead in this, and of course, there are multiple banks. So RBI being the owner of the token generation, which is a centralized token generation, that has a hyperledger blockchain system, which has the complete token generation system. It's a kind of a token generation currency, which is there in digital form, not in physical forms. Number two, the RBI is a central token generation system. Banks which are currently in pilot, 13 banks, they act as a distribution TSP, token service provider. And subsequently, when it comes to the distribution, it is either retail or corporate CBDC. When it comes to retail, banks have the digital currency taken from the RBI, which we normally call it as a chest, right? So then subsequently it is being dispersed. Since there's no branch involved, the wonderful opportunities with India as such in the last 3-4 years with pandemic being proven, we have shown huge amount of payment digital implementations in the world. And the extension of that is now the digital currency is going to help us in making sure that the efficient payment mode is going to happen. So from a retail perspective, there's a currency which is there, which is digitally available, token signed, authenticated. NPCI is playing a key role for PSO, which is a token validation. So if I need to do a transfer from one account to another account, every transaction is being validated. There are 5 levels of security, right from mobile app to app level, API level integration, business layer, data in motion, data in rest. In each of those layers, it has been well thought process. There's a 5 levels of security which is there. To summarize from a layman perspective, it is a digital form of currency. It is available with a token-based generation. The governing part and the tokenization is being done by the issuance is coming from the RBI, supported by NPCI. NPCI plays a role of the PSO, which is token validation. And the distribution happens from every bank. Every bank will have a DTSP and the RTSP. RTSP is the one which does the distribution. And that makes the life simple in terms of efficient payment, no easy reconciliation, rather negligible reconciliation. I don't need to worry about multiple transparency in getting the transactions flow. And at the same time, ensuring that we have a strong, competitive, alternate option of payment mode. Thank you.
So, this is fantastic. I think while Ajay referred to it as a stored value and digital cash, you started peeling the layers on what it is underlying. And what I picked up was that it's essentially a token generation system powered by this new technology, which is blockchain, Hyperledger in this case. RBI still continues to be the mint which actually generates all of this, but it's really a technology that creates a token, and banks are the token service provider, and PCI also has a role. So I think just as a listener, as a layman, I'm able to conceive what's really happening. Just as RBI mints currencies, it's able to mint tokens. These tokens are nothing but digital cash, and that goes about it. So thanks.
Just clarify one thing, Yash here, that so there are actually 2 levels of technical architecture here. One is where Reserve Bank talks to the bank.
Right.
And the next is where the banks talk to the customer, the
Right.
payment layer.
Right.
So the top layer is, which is, the technology that Balaji mentioned. The bottom layer is actually not on blockchain at this point of time. The
Got it.
reason being that there is absolutely no scalable fabric available in the world which can cater to the size and complexity which a country like India has.
Yeah.
And from a regulator perspective, it is very clear that unless we are able to build scale at a population size in India, that technology is we will kind of experiment on that technology before we go live on that. So the below is similar to the UPI architecture, which is already tried and tested. The above layer is really where the blockchain at this point of time plays a role.
It's fascinating. Getting something of this nature to population scale in India is a real challenge. And if we do that, as you are saying, Ajay, we will establish, I think, international standards on what it means to go to the last layer and make it happen.
Which is the final motivation of why the Reserve Bank actually brought in CBDC.
Beautiful, beautiful.
Sorry.
I have the distinction of having SBI and Bank of Baroda right next to each other on the same panel. So next, Joydeep sir, if I may come to you, and if I pull on the thread of its importance, from your vantage point, you operate at a level in the banking system in India where you're looking at technology, you're looking at regulation, you're looking at users, you're looking at banks as participants. But why is this really important for us? How should we think about it?
Yeah, so thanks, Yash. And also, first of all, let me thank IBA and FICCI for inviting us and allowing us this opportunity to participate in this discussion, which is absolutely very profound, and in terms of the impact that it will have as we go forward in the digital economy and as the public digital infrastructure moves on. I think it's very, very important to discuss this. So thank you for that. I think what Ajay and Balaji just referred to was what is CBDC and why technology is important as we scale up for a country like India to get to the, say, for payments or financial services, etc. So we need to sort of bank on technology in a big way. So that is one. Second, I think there are a few things which are important to take note of when we look at the development of the digital public infrastructure or payments infrastructure in India. Why is it growing? For example, say the success of UPI, and all of us are aware of how UPI has expanded and how what is the scale at which it operates and what it does, and how it has brought about a sort of a revolution of sorts in payments. But I think at the backbone, the back of it is two things, right? So right now UPI has around 300, 400 million users approximately, and around 70 million merchants at last count. I think every 15 days this number keeps changing. So this is basically on the back of two things. One, the penetration of mobiles in the country.
Right. Right.
We have around 100, our country's population is around 145 crores, approx. Uh, the mobile number is around 155 mobile numbers in the country today. We have around 225 crore bank accounts.
Right.
Right? So we have more number of bank accounts than number of mobile numbers. And I think these are two standout things which actually has enabled the entire digital public infrastructure to get developed, because all of it is in the back of this.
Right.
You have to have an underlying bank account, you have to have a mobile, and that is where the entire infrastructure is built. Right? So similar is the case for a virtual currency. Right? And there are advantages of why you need to look at a virtual currency. It's of course CBDC is it's a digital cash.
Right.
So it's legal tender, as well as it's supposed to operate as digital cash, as a cash alternative.
Yeah, like the cash in my wallet.
Right, like a cash in a wallet. So if it is to operate as a cash alternative, again, in a digital format, you will require these digital backbones,
Right.
both on the mobile as well as, and that is where India is very sweetly positioned,
Right.
and that is what has helped UPI, that is what will help CBDC to grow, and that is where I think we will look at CBDC becoming very fundamental in terms of a cash alternative in the days ahead. And importance of it, definitely it's fast, it's effective, efficient, real-time as we go forward, and also cost-effective, because Ajay talked about the cost of currency printing and all that.
Correct.
So that again is something it will all do away with. So these are typically advantages that accrue out of a digital currency. But at the same time, I think in terms of the user experience, I think if you look at a cash alternative, there are 2-3 things that are that definitely a user would look to.
Right.
One, a cash is anonymous, right? So anybody who gives the cash, his name is not transmitted, his bank account is not transmitted, right? So similarly with CBDC, the moment you give that, the bank details do not get transmitted. In a UPI, the bank details get transmitted, right? So that is where I think there are specific USPs and advantages that will grow. Of course, we are at a very formative stage in terms of where we are in the evolution of CBDC. And as we go forward, I think this USP of the CBDC will also catch on. One, the anonymity factor.
Right.
And second, I think cash largely is used for payments, right? And UPI is already handling that payment part in a big way. One good sort of noteworthy development that has happened very recently is the interoperability with UPI.
Yeah.
So the moment the regulators allowed that interoperability with UPI,
Of CBDC.
then automatically all CBDC users can now go and make a payment in a UPI QR code.
Yeah.
Right. So then that makes it almost
That's game changing.
Almost game changing. And all of a sudden, the 70 million merchants that are there on UPI automatically become merchants of CBDC also, right? So that is where the scale expands immediately. And then, of course, in terms of users, etc., as they get onto the bandwagon, I think, and they understand the USPs of it. And plus, of course, there are other conveniences that will keep getting built up over a period of time. And we will have multiple use cases that will keep coming up.
So this is fascinating how elegantly this potential conflict between UPI versus CBDC gets resolved by saying the same QR code, you can do everything. It gets interoperable. So it's elegant, but it's completely game changing. And I think you made some very critical points about its importance. There is a general importance, but there is specific to India. First of all, you said that, look, cash is critical, and cash has some specific unique attributes. It is anonymous. It can be used at places where you don't have a digital point of presence. And all of these attributes can get embedded in a technology like this. So that, I think, is a big thing. The other thing you said that we need to keep penetrating digital penetrations more and more and more in the country. So all the marginal use cases that maybe UPI or POS or these things are not able to address, even this can maybe help that cause. The thing that you said, which is specific to India, and I personally feel most inspired by it, is this DPI point that you made, the digital public infrastructure. If we have to, and going back to the point that Ajay was making, that if we have to establish a global standard on what it means to have a central bank digital currency, then it will be as a digital public infrastructure for India, going to the last mile. So it's just fascinating what this can do. Thank you for sharing that. Mr. Ratan, if I could request you to build on it. Now, you have been a very keen observer of this. When we were discussing this beforehand, sir, you spoke about retail, you spoke about international, you spoke about cross-border, you spoke about many other aspects that are very close to your heart. So how do you see, as a senior banker in the industry, this technology evolving, this capability evolving, and its importance for us?
Yeah. Thank you very much, Yash, for giving an opportunity for the IBM and FICCI for giving us an opportunity to share our thoughts. Let me build on the subject. As we see, I will dwell upon the use cases of CBDC as such. So one very important use case which I see is the cross-border settlements which is going to happen.
Right.
It is going to revolutionize our cross-border payment systems as such. Though RTGS, NEFT and other IMPS, they are all there. And this particular CBDC use case is going to be very efficient and real time. And most important is that it is going to reduce the transaction cost in the international settlements. As we go upon, even as on today also, in this world, on the digital world, the transaction costs for the settlement and clearing is roughly amounting to around 6%. Okay, so this is still high, and this can be further reduced and it can be brought down. So this is one very important use case which I can see as far as cross-border settlements are concerned. The second use case is obviously is very important. The very important aspect of it is programmable nature of CBDC. Okay, so this is a very use case interesting, and specifically for a country like us, where DBT plays a very important role in the fabric of the country, especially in the agriculture sector and all. It is going to be very specific, and for what purpose this particular DBT is being promoted, that would be meant for that. So we will be able to direct the subsidies what we are going to give as a nation to a specific purpose. It would be meant for that purpose, and it would be ensured that it is used for that purpose. So these two are going to be very important things as a part of use cases what I see. Apart from that, there are certain other aspects in terms of as a country, we have gone ahead, far ahead of the other nations in terms of payment systems as concerned. Okay, India is a showcase for the digital payments infrastructure what we have, and though UPI is making a substantial strides in that, as Mr. Joydeep had said, the interoperability between UPI and CBT is going to be a very important game changer in democratizing the payment infrastructure in the country. So I think...
No, this is fantastic. I think the points about cost reduction, the points about programmable nature, again, unique to India, the point about direct benefit transfer, so that the right end use of the benefits that government is providing actually gets delivered, are pretty important cases. And I think this just lists out this page, some of the points that were made on the panel today and what we are observing. Balaji, can I request you to make a very quick point on the last point here? Because when we were discussing earlier, you made a very interesting observation about hollowing of the core. And I know it can be a topic that can take an hour. So if I may request you to try and explain why, just from a technology perspective, hollowing the core is a really critical thing for us.
Yeah, so traditionally, core banking system, I come from a hardcore IT background, development of core banking applications, have done various implementations. So one of the point is on with growing volumes, with growing large value, high concurrency accounts, high concurrency transactions, especially UPI kind of payment transactions, there's a lot of, at the same time, with digitization, the amount of load which is happening in the core banking system is pretty huge. Traditionally, core banking systems which are built as a legacy were built for branches. I've seen the transformation of branch banking to digital banking in my previous organization. So with this, the number of inquiries in the core systems is almost 70% of the requests which are hitting in the core systems, 70 to 90%. And only 10 to 15%, 20% are real financial transactions. Why? Customer has the ability to inquire when a salary credit happens, when interest run happens. Every part of time, there's a specific session in which there's a huge amount of login, high concurrency, people want to check the balance. When a financial year gets over, every bank has a pressure on completing the financial year because that's a P&L for the year, for the bank. And there's a window in which there's a process of validation from the financial systems. In certain specific times, there's a pressure on the customer increasing loads. So alternate way of getting certain type of transactions of financials like blockchain kind of thing where certain kind of transaction can be initiated, it's one more alternate option. Everybody talks about next-gen core banking systems, which people have discussed with me. Can we build in blockchain? Of course, the success of blockchain is all about having a distributed ledger, which is common across the country. And thanks to NPCI, that NPCI is playing the pivotal role of having that central core system, which means, for example, SWIFT is one of the payment mode. Moment I have an international standard, everybody will fall in that standard.
Yeah.
So the NPCI plays a role of central thing, so entire nations follow the standards. Coming back to the subject of on the concurrency, the core systems, the load is getting reduced to some extent, and the new avatar of next generation digital currency is something which is revolutionary and which is also for the future sake because there is a decline in the number of cash flow, people have moved to the digital, and hence this is one more alternate option of moving, reducing the load of the core systems.
I think what you said is actually the golden thread between several points that all the other panelists made, and certainly I didn't think of it this way, and I suspect a lot of people in the audience don't appreciate the point that when you reach population scale, the stress that it puts on banks' core systems is non-trivial. And your statistic is staggering. Like if only 20-30% are genuinely financial transactions which are creating stress and the rest are not really financial transactions which are creating stress. This is very complex, right? This is not healthy. And the point you're making, the point that you made, sir, about DPI is that DPI takes some of the load off because you go into a central utility platform. It's not all the load on just the core bank. And some division of that labor can perhaps help some of the scale to happen. And certainly this is an alternate to UPI, alternate to some other forms of transaction. So there is another division of labor. Is that?
Just want to add, when you talk about the core banking has a general ledger, which is a single truth of source for the balance sheet of the bank, the balance of the customer's accounts. So some way you are also diverting this and making it lighter. Traditional core banking systems has a workflow, they have the processing, they have their typical multiple operation groups working in the same core banking systems. The change is happening, so you move that operational part up in a different system where there's an onboarding system, there's a digital channel system which is punching in the data entry which from the customers, there's an onboarding system which is lighter, and essentially make core banking system only for ledger of entries, customer data, accounts, balances, the ledger entry which is the final single truth of source for the credibility of the bank of P&L. That should be the cream level which should be there, and remove all these operational overheads which have been built for the branch-based systems. Branch-based systems continuously keep loading to the core systems. So in this way, there's a shift in the load. And now to the next level is an alternate core system.
That's fantastic. I think we are pushing the frontiers of thinking here to make sure we haven't had a very loud and annoying noise in the mic for a while. So I'm not sure how engaged still the audience is. So this is an audience question. And so the question is, how many countries are doing a serious pilot? There are many countries who are, and I think Ajay is going to shine more light on it. But how many countries do you think are doing a serious pilot? So this is A, B, C. A is 10, B is 30, C is 50. Can I have a show of hands for people who think it's A, 10? Okay, that's A. B? Okay, B looks more than A. C? C is very less. So people are not hopeful. Actually, the wisdom of crowds, it is B, it is 30, but frankly, this number changes by every few months. So this is valid as of a certain reasonable date. But Ajay, you had a view that this number actually doesn't reflect the full effort which is underway in the world in terms of CBDC.
Yeah, that's right. And so this is, the question on how many are doing serious pilots on CBDC, is 30. But the number of countries and regulators who are evaluating CBDC seriously as a alternate payment source is upwards of 100. So, and these are, large countries, European Union, Africa, etc., countries who are all trying to see a plausible alternate, to physical cash, and so that's a large number. And, over and above the cost of printing, which is around 5,000-6,000 crores as stated by RBI, there is also a very, serious other implication of cash, right? That, 6,000 is only the cost of printing. There is also a cost of maintaining cash, right? The banks maintain cash, the ecosystem, the companies, dealer, vendors, shops, they maintain cash. There is a cost of counterfeiting which you can never tangibly quantify, right? So there is a larger impact of cash on, the monetary policy or, the government, the fiscal policy. But, and that is really where the regulator is trying to see how, we can make India a less cash economy and divert more usage towards, digital money, right? And I consciously did not use the word cashless. I didn't want to flare up a controversy here. Less cash is really where the regulator.
I don't mind a controversy.
Where the regulator is aiming at. I just want to add, Yash, if you permit me, on a few other use cases which, were the guiding motivation for the regulator to look at. Oh, sorry.
No, please make your point. I will add a little bit more, but
Okay.
please.
So, we heard about programmability and, DBT and other things, which are there. One of the very, very important motivator for a regulator to also look at CBDC was also offline.
Offline.
Now, if you look at digital payments or UPI's success story is linked to the jam trinity and the internet proliferation in the
Correct.
country, right? But what we forget is that there is another part of, the country where internet proliferation is not yet there, where feature phones are still extremely relevant and smartphones have not yet penetrated, right? Now, those are jurisdictions, areas where UPI is not yet there, right? CBDC is also aimed to get that part of the population in the financial inclusion. And that is, a stated objective of the regulator in the draft CBDC policy also, which was, unveiled, that offline will be a major use case, for CBDC. Now, it is still under pilot or, under technical evaluation. But once that comes through, that will be the pillar of, getting CBDC upright. Now, we talked about subsidies and, DBT transfers, right? But when the money goes to that beneficiary, how does that person take the money out? There are only two avenues. One, that person goes 30-40 kilometers to the bank branch and, gets the money out. The second is they use Aadhaar AEPS, go to the Kirana shop and get the money out, right? Now, these are still fairly cumbersome process. Now, if the offline comes in, along with the programmability or along with the DBT transfers which are made, then and with the UPI interoperability that we spoke about, right? The access points for usage of cash, is significantly increased.
Yeah.
Second, UPI is artificially made free. CBDC is by nature is free. There is no payment instrument, and please, you may absorb this. There is no digital payment instrument in the country today which gives a merchant free of payment instant settlement.
Yeah.
There is no instrument.
No, that's
This
very
is the
powerful.
only instrument.
Very powerful, Ajay. And I think we have discussed, Ajay, you make very critical points about the power of CBDC and how many things are under technical evaluation or pilot. I know that all three of you are also currently involved in the pilot. So maybe Joydeep sir, I want to call upon you to talk about the experience of Bank of Baroda as an actual practitioner in the CBDC pilot.
Yeah. So just before I get into the experience part, I think just to expand on Ajay's use case, and we were talking about that poll question that you gave to the audience also on
Yes.
how many countries. So 30 countries who are actually doing pilot and around 100 who are still in a very active stage of discussion on CBDC. So 100 countries is basically a very good sort of a number who are all thinking about how to get to a digital currency. Like in India, we are doing the CBDC pilot, and of course now it is going beyond the pilot into a real active mode. But I think if you just look at just one use case, now whenever we visit, say, a country abroad, we take our cash, go abroad, we look for a money changer, exchange our currency there into the local currency there. Right? The moment 100 countries are live on CBDC, you have CBDC currency in your wallet.
Yeah.
You go to the other country, you just there's
Instant exchange.
instant exchange.
Yeah.
Right? You don't need to go and search out for a money changer and then give physical cash, or you can do it sitting in the flight or sitting even in India before you have actually reached the other country. Right? So that's where, and it is across 100 countries. Right? And as it grows, that's a big use case that will happen, which is cross-border also, not just limited to what we do in India. So that's
That's very powerful. And that actually talks to the small section of this pie chart, which was the
Absolutely.
international and...
Absolutely. Now coming to the experience part, of course, it's 1 year, exactly 1 year probably that we have started with the pilot. 1st of November, I think we started this pilot. In this 1 year, I think the effort from the regulator's side has been to look at what are the issues that are coming, what are some of the
Right.
further steps that we need to do, move about it in a very calibrated manner so that you are addressing some of the pain points, etc. also, plus whatever course corrections, etc. to be done that can be carried out as part of this pilot itself. So all that I think has been a very good progressive and a learning journey. And I think it's fairly stabilized in terms of the full technology.
You feel it's
piece.
getting stable now?
Yeah, I think it's stable now. It's on the technology part also, and plus on the processes part also.
Sir, what will be the inflection point then? How do you think that can happen?
So, so right now, I would say in this last 1 year, the number of users on CBDC, right? You cannot compare it, of course, with UPI numbers, right? But at the same time, I think the overall industry, the number of users would be around 25 lakhs as of now in just 1 year.
Wow.
Right? And it's just a pilot.
Yeah.
Right? And of course, a lot of users have come in firstly with a curiosity factor. What is it to look at a currency which is digital, a 5 rupees note or a 10 rupees note, which is appearing in the digital form in the mobile phone, right? So that curiosity factor itself has propelled a lot of people to come onto this platform and also take this wallet. But going forward, I think as we go with these use cases that Mr. Ratan talked about, Ajay talked about, I think people will start using it much more frequently. The transactions, so the proof of the pudding is when the transactions will move.
Yeah.
Right? So now the stage is where we are onboarding users, we are onboarding merchants. The merchants thing, I think, will automatically get a huge jump because of the interoperability aspect that has got.
That's a good point.
But the number of users, I think.
So technically, every merchant with a QR code today can be eligible for a right?
They can.
That's huge.
The way it works is, yes, that the QR code is interoperable. If the merchant has a CBDC wallet, the money will go instantly
In the
to the
CBDC.
CBDC wallet.
Fantastic.
If the person does not have a CBDC wallet, then it will go take the UPI route, and in the UPI settlement file, it will come T+1 to the merchant. there. So from a merchant perspective, he's actually neutral. I wouldn't say neutral, but I think he would be more beneficial if he
Becoming
goes on
seamless
CBDC.
and getting there.
But yeah, from an experience point of view, it's it.
Fantastic, fantastic.
And in terms of users also, what the effort from the banks right now is to onboard more and more people. And as they start using it, even if it's just one transaction, two transaction, they get hooked on, right? And then people start, and those use cases start developing, then automatically the basket enlarges. Our bank right now, we are at around 2.5 lakh users, around
Wow.
12,000 merchants. And this is just
I mean, this is just pilot stage. It's
just
very
pilot
early.
stage,
Yeah.
right? And we hope we would be able to go to around 10 lakh figures very soon, because with the numbers expanding so fast, so 10 lakh figures will be, I think, no time. And then, of course, as
Sky is the- I mean,
sky is the limit.
India's
So
population is the limit.
that's-
So, no, that's fascinating. And just a quick point for the audience as we get into the last 10 odd minutes, we'll keep the last 5-7 minutes for some audience questions as well. So, I will maybe do a couple of quick questions and then we will open it up for the audience. I think we have spent a whole bunch of time on the use cases. But Mr. Ratan, if I could come to you on two questions combined. So you are getting two in one. One is the positive side of the story, which is, are there use cases you feel excited about as a senior banker? And the second one is, what's the glass half empty side of this story? Like, what are the risks? What are the hurdles? What are the enablers? What do we need to do? From this forum, we can also send a message out in terms of what needs to happen in the regulatory environment, policy environment, even just, banking environment for this thing to really fulfill its potential.
Yeah, let me take the positive side of it, the enablers part of it. I mean, basically, the fundamental thing is that there is a great amount of sync between the government and the central bank in our country towards this great initiative of CBDC. Okay, it is enshrined in our recent budget as well. So it's a positive thing. The second important thing is the drive towards a cashless economy. I mean, to make it more democratic is a very important tool for the bankable and unbankable sectors across the country. So this is one great initiative, especially in the offline mode, as Mr. Ajay said, is going to be a democratizing the payment system and infrastructure. The other important thing is that the transaction cost, which is going to bring, it is going to come down in terms of the real time and avoiding the clearing and settlement operations as such, is going to reduce the transaction cost. So these are some of the important things which I see. The challenges, of course, is about the scalability factor of it. I mean, India is a big country having a huge population. How do we scale this in a secured manner? And the challenges now, it will bring a greater responsibility from the regulator point of view, especially the central banks, to have this kind of technology built to operate this scale. So, which is going to be very, very interesting to see. These are the things which need to be addressed. As far as the security is concerned, because if we are using a very secure technology like DLT and all, it is very secure from the cyber attacks and other points of view. These are the things which I think I see.
No, I think you make actually quite an important point in the form that while India's population scale is exciting and challenging and creates all this opportunity, but it also means that no one else has done it. So,
yeah, one more thing which I wanted to add from the banker's point of view, which is that what will happen to the deposit base of the banks?
yes, yes.
Which if it is driven towards central bank, then the retail deposits of the bank and the bank's ability for credit intermediation, so it will impinge on that. So how it is going to get addressed in the dynamics, I think it has to be seen. It has to get addressed and it will be addressed, but this is going to have an effect on the bank's credit intermediation. So
Fantastic.
That's it.
Fantastic. So I want to open it. Are there mics in circulation? I wanted to open it up for the audience. If there are questions, Please raise your hand, quick introduction, and then we can jump in. Ajay, while that question is being asked, I'll leave a question with you and tell us, if I open a CBDC wallet, where does my money reside? Is it with Yes Bank or is it with the Reserve Bank of India? But let's hear the question. You can address it somewhere along the way. Please.
Yeah, okay. Means the origin, what I understand from the panel, is that your cash from the system will be converted in whatever manner into CBDC. Now, assuming there are 20 lakh crore cash in the system, does it mean that RBI would reduce their money in the circulation? Because when you're saying it's going to be guaranteed by RBI, so 1 lakh crore would be off the system, like it will be taken back and it will be converted. Is it the intention? Secondly, you said it's anonymous, like one side you're saying it's anonymous to cash, and other side you're saying it is equivalent to central currency, digital currency. Now, instead of a bank, you're keeping it a wallet. It's our understanding. In bank, if I keep my money, I get interest, maybe saving 3 to 7% as the bank, maybe. If I put it in Yes Bank, I may get 6% interest. But if I put it in the CBDC account, this thing, I may not get anything. So just wanted to understand clarification, whoever can provide.
So maybe Joydeep sir and then
Maybe I can just,
Ajay as well.
See, we have this definitions of money supply, right? M1, M2, M3, we talk about all those money supply definitions. And money in circulation is basically what is the amount of cash in circulation plus the amount of deposits in the bank, basically. CBDC will add a third element to it. In terms of money in circulation will be cash plus CBDC plus money which are in the bank as deposits. So all three combined will be money in circulation. So that's what it is meant to be. At the same time, what I would look at CBDC is more from the angle of substituting for cash rather than substituting for bank deposits, because bank deposits have their own use for a end customer, for a customer. But then there is also a cash in circulation which people do use, maybe as a store of value, maybe as a unit, or maybe as a sort of a, it could be used for general payments also, but of course payments now, you have a lot of payments moving on to the digital side through UPI, etc., which again CBDC will also be able to do. But at the same time, there are other multiple use cases for programmable sort of payments, etc., which can be specific only to CBDC, which definitely are being thought about and being discussed so that the entire ecosystem of CBDC also enlarges. So ultimately, it's meant to be a substitute for cash, which again helps. There are multiple advantages that we spoke about in the panel also spoke about. And ultimately, it also helps the customer in a variety of ways. So that's how it's envisaged. Yeah, Ajay,
Finally, the physical currency which is kept in a wallet, right? There's always a threat that somebody will get robbed, right? So the security of the token, the validation of the PSO becomes one more secured wallet without a physical presence. Number two, as I mentioned, FY22 we had around close to 5,000 crores of printing cost. The physical calculation, every branches, every area, there's a reconciliation of cash notes, which is again a big pain. Coins, they're all filled up. I mean, every bank have this problem. Operational cost of managing this. Reconciliation. Every branch, the first thing they'll be worried is, have I reconciled my day, end of day for the cash? So generally we have to, in general, I'm saying this is one of the alternate option to reduce that burden. Number two, overall I just want to touch upon, this is a golden opportunity for the country as such. Everywhere when you do a remittance of cross-border fund transaction, there's a USD which gets favored. This is a golden opportunity for us to get INR as a favorable option to get this impressive note on cross-border remittance instant. When I do a fund transfer cross-border, every time there's a cost of charges USD, which gets benefited. So it's a golden opportunity for us to get the fast, seamless transactions. And with the collaboration of a blockchain, one of the fundamental reasons why blockchain is not picked up in India is everybody has a separate system. The fantastic thing which has done happen this part is in technology-wise, there's a common platform for the country in the name of RBI NPCI, which is a single blockchain platform which sets the standards. To take it to the global, I would say we should become something like a SWIFT as a global player for the entire world, saying that like a SWIFT standard. Because everybody who attended, for example, blockchain in BFSI, remittance and trades were attempted, trade financial transactions were attempted in the past. Because of disjointed, different way of integrations and different systems, they didn't succeed. But now there's a common platform, which makes the maturity and the commonality with respect to alignments. I think we should take this as a common, and we should probably the next SWIFT, maybe we will replace SWIFT as an option for remittances. It's a golden opportunity.
That's fantastic. One question, Balaji. Does India have a very different customized blockchain protocol that's being used, or is it just some general
So
standard?
the base framework is Hyperledger Fabric, which is coming from the base. You can always customize based on our ecosystems.
Got it.
Like for example, we clearly mentioned about saying that like beneficiaries. One of the reasons why the infrastructure projects in country delayed is timely payment doesn't happen, right? We have seen this. If we need to improve our infrastructure, if we need to improve our transparency, if we need to make sure the beneficiaries get the payment on time, we need to make sure that such large financials, for example, I want to tell you, 40,000 merchants were onboarded in terms of registration. SBI has done 4 lakhs registrations so far. We have done 40,000 plus registrations for merchants. Our QR code is enabled interoperable for P2P, P2M, P2P is in WIP. So this makes the interoperability, and from usability, I just want to add upon, it gives a feeling like in a mobile app. I just have the same feeling, just that physical currency is missing. Whatever denominations you are seeing physically handling, it shows as an image. And when it comes to the interoperability, that is taken care.
Fantastic.
I am K.K. Gupta here from Research in India. My point is, it is very heartening that cross-currency, you can exchange it. Again, what rate of interest exchange will be there? What commission will be there? And how much Indian 100 countries, what you're talking about, they will exchange your note, currency note. So how it can be useful for a resident who is going to be abroad to get this encashment from the foreign country? If you're going to USA, suppose, what commission they were going to charge? What exchange rate will be there? And what will be cost for the beneficiaries of this currency?
So there are 2 questions, and I'll unpack them as I heard you, sir, and maybe we can choose which part and who wants to answer. There's a question around this exchange and the commercial part of it, how will it get set? And then there's also a question that you asked towards the end around the cost of this currency. Obviously this currency
That is more
perhaps
important.
is not free. So maybe I'll put both of them, and any of you on the panel have a view on one or both. Ajay.
Yeah. So before that, actually, I have to close that topic, but I don't think his question was actually answered. To your very specific point on, so RBI will manage the currency in circulation. So while, like Jaidev sir said that, there will be 3 modes now instead of the 2 earlier. They will obviously bring one mode down, which is the physical cash down, and get the digital cash up. So right now, as we speak, there is 16 crores worth of CBDC in circulation. Once it reaches a certain scale, obviously the cost of cash or the physical cash in circulation will come down and the digital will go up. So all of them will continue, because that is the only point when CBDC will actually be justified, right? Otherwise, if your physical cash is also growing and CBDC is also growing, I think, it doesn't meet the purpose. So that is one. Second, the point that you asked about why would user forego of the interest. See, there are 2 models to it. One, user who would prefer better anonymity than digital money would prefer a wallet, because all the transactional level entries are happening in the wallet. Second, RBI is very clear that they will bring cash-like anonymity into the CBDC. What it means is that up to 50,000, for example, cash is anonymous, right? You're not supposed to or required to give proof, etc. A similar technical and regulatory anonymity is being proposed or being worked on for CBDC. So that will actually address your one part of it. The second part is that banks now are using CBDC with an instant top-up as well. So for example, the way I use CBDC, today for any UPI QR, I actually only use my CBDC wallet. I do not use any third-party QR. So because my CBDC wallet QR is able to give me access to all the merchants where CBDC, where UPI QR is established. That is one. Second, whether the money is there in my wallet or not, there is an auto top up from my account. So assuming I have 1,000 rupees in my wallet and I am using it for a 2,000 rupee QR, 1,000 will get debited from my wallet. The remaining 1,000 will get debited from my saving account into the wallet, into the merchant. So what it helps is that the name of the merchant does not come into my in my saving account statement. It is only reflecting in my wallet, which is more anonymous than my saving account. So those are, so I don't necessarily need to move it from my 6% saving account. It can remain in my 6% saving account and get transferred instantly when the payment is happening. So I can use it both ways. To your point, sir, the cross-border part is still very nascent. So while there are 100 countries who are working on their versions of CBDC, what is not yet finalized, and that is, RBI has actually signed agreements with the UAE, for example, to not only proliferate UPI, but also understand the nuances of CBDC. So the areas which are actually, underway in terms of discussion are at what rate or what how will the exchange rate kind of, be converted? How will the money actually move? Will there be a special rupee account or currency accounts which will need to be opened? So these are dynamics which are yet not finalized. And once those get finalized is really when cross-border remittances, both P2P and B2B, which is export-import trade payments, will actually get fructified. So I don't think there's an answer to your question at this point of time, but that is what the regulator is working on with other country regulators.
Joydeep sir, you have a point. And then after that, one last question. I think there is lunch after.
No, so I think it's again, the cross-border part is actually evolving. So as of now, the processes, settlement mechanisms, etc., are all sort of getting stabilized because the other countries also are working on CBDC, like in India. So all that will have its own evolution cycle. And plus exchange rates, etc., these are determination of market forces also. So it's very difficult to right now say, put a number to what the exchange rate or what the commission rates, etc., will be. So this will get established over a period of time, right? And I think there are quite a few I think developments which will help this entire CBDC ecosystem to also grow. One point that Ajay was mentioning on the offline payment system. So I think as that offline payment system starts getting operationalized, I think that will again enlarge the use cases for it. Like in UPI, now even for CBDC, probably a pinless payments for small payments for so that again is a feature probably may come in CBDC in due course. So again, that will greatly to enlarge the ecosystem. So there are quite a few things that are work in progress that will help. Balaji talked about the P2P thing which is under development. So while the P2P merchant has already got established, so payment from individual to merchant is already possible. The payment to payment, person to person transfer, the P2P thing, that once it starts, that itself also is a big sort of a enlargement. So all these things are sort of are things which are in progress, which will help the ecosystem grow, and I think will definitely help us take the due benefits of this entire CBDC ecosystem.
Fantastic. We are seeing a rise of a new.
I have just suggestion to make.
Sir, yes, no question, but suggestion, absolutely.
I think there is a great need for creating an awareness from a commoner's perspective. How is it actually substituting a cash in my wallet? And if we can create a good FAQs and put it on the website of each bank who are already into it, or maybe the BCG take the opportunity of this FIBAC. And I think a lot of good use cases can be introduced in those FAQs, which will create the awareness and people will understand it's not a different thing, but simply substituting a cash in the wallet, which I use in for the various payments which I make in the market. I think that will be very, very helpful to really increase the usage. I think that what you're saying, 16 crore or 25 crore, which will go to 25 lakh crores, no issues. Absolutely. The only thing at the end of the day, the cash to deposit ratio, that is physical cash to deposit ratio, should get reduced. And while we said that cash in circulation will be cash plus cash in the wallet, I think that concept I'm slightly apprehensive that our effort should be when you are moving to the less cash economy, uh, the cash in the wallet should not be treated as a percentage in cash circulation. It should be physical cash, which should get reduced ultimately. Thank you very much.
Thank you, sir. Thank you.
Fantastic point, sir.
No, that's a wonderful point, I think, made on the education awareness building part. I think in the panel we didn't discuss that enough. So I think that is one very, very essential part as we think of now moving from the pilot stage to how it gets operationalized at the ground level, where user base increases and a lot of use cases, etc., come in. There will be a lot of requirement for the awareness building, for getting people to know what they can do and what they cannot do out of it, what are some of the benefits and USPs out of it. So that, I think, definitely will be it's a regulatory awareness building plus bank plus individual level also.
Yeah, so
Thank
just
you.
at top of
Tansali
that,
sir was like, sorry, please. I was just going to say that Tansali sir is like an
promotional offers.
extension of our panel. There's a important point that we missed that you made. But yes, Balaji, please.
Yeah, so one is definitely the nation awareness part. Yes, number one, on the usage, number one. Number two is bank, like for example, SBI, we're already doing promotional offers on the channels. Like Paytm used to say, like, no, when you do this cashback, when you do a transfer, first registration, we do a cashback. So a combination of the usage of CBDs, definitely as a nation we should do. Number two, every bank will definitely promote, and we are happy to promote. So it's a collaborative effort environment. And number three, all the cooperative banks, like they get the cash from the larger banks, the largest bank will still support for the extending the same for the MSME and as well as for the cooperative banks for the subsequent distribution as such.
That's fantastic. Cashbacks always welcome. As a consumer, look forward to that. But on that, in discounts as well, yeah, loyalty, discounts, cashbacks, all very welcome. But look, I think this has been for me a fantastically enriching 1 hour on a topic that can clearly go on for hours and hours and hours, if not days. 3 big takeaways. Number one, this is not a question of if. It's foundational, it's structural, it is proven, it is stable, it works. So it is done. The second thing is, there is a clear need to do it. There is a consumer need, but there is a national need, which really drives the importance of something like CBDC, whether it is cash, whether it is security, whether it is efficiency, whether it is programmability. And I think the final one is, the next frontier that we need to push is, how do we take this to population scale? There's a technology challenge, but there is also an awareness challenge. There is an education challenge. There is a use case challenge, which we all discussed. So that's really the domain of problems that are left to be solved to do this. Gentlemen, I can't thank you enough for taking the time to talk about this really critical issue with us. As I said, I have learned a lot. I hope the audience has as well. Taksali sir, to your point, we'll try and capture some of this in our notes, and sir will circulate it as well. Thank you so much for the opportunity. Thank you, ladies and gentlemen in the audience.
Thank you. Thank you very much.
As the
Thank you, all dignitaries. Ladies and gentlemen, it's now time to break for lunch. The next session will resume at 2:15 p.m. May I have your kind attention for the lunch venues? Managing committee members and panelists may join us for the lunch at the Mexican room at pool level. The lunch for other delegates has been arranged at the food staging area in front of the lift and arranged outside this hall. My colleagues will guide you to the lunchroom. The lunch for other delegates has been arranged at the food staging area in front of the lift. I request everyone to please join us back at 2:50 p.m. for the next session. Thank you.